Happy Friday. Sort of a mixed market. Fractionally down overseas in China, fractionally down over in Europe. Car makers a little bit weaker. Once again, of course, we have skepticism on the NAFTA deals, some question about whether China tariffs will be coming into effect in the next couple of weeks. Let's just take a look at the sectors today. And predictably, sectors that get impacted by trade, such as materials and industrials, are a little bit weaker. Financials have been weaker most of the week, actually, because we're not going anywhere on rates. But the important thing is tech continues to hold up and consumer discretionary continues to hold up. And this is the key story. While we might get a little bit of flatness and weakness over in Asia on tariff concerns, our rally continues to roll on. And you can see here just at the open for the week, tech has been strong. Semiconductors have been strong. Consumer discretionary has been strong. We've been talking about Amazon that's in that group. The key here to this market is really the amazing strength in healthcare right across the board, whether you're talking biotech, pharma, medical devices, it doesn't matter. Healthcare is a real stalwart, and that is not a trade story. That is not so much impacted by trade, but that's really been helping the market. Energy also modestly upside, and as you can see, banks not really doing anything. So the financials aren't the key. The key is tech, consumer discretionary, and healthcare. The market's at a new high. All this week, we've been discussing how everybody's retirement is doing. The good news here, of course, is 401ks are up 6 or 7% year over year because the market's better. That's good news. The president is trying to move things along here in this whole retirement debate today. He's going to issue an executive order today asking for consideration on easing the rules for small businesses to offer 401ks. Hard to do that as a group right now. That's a good idea. He, more importantly, wants to review the rules requiring retirees to take withdrawals from their retirement funds after 70 and a half and modernize the life expectancy tables. You're required to take those withdrawals at 70 and a half. Why? Because 30 years ago, people didn't live as long as they are now, and they wanted earlier withdrawals. But people are living well into their 80s, in some cases into their 90s. The life expectancy tables need to be modernized. This is a very good idea. The effect of this might be, hopefully, you'll be able to stay and keep more money in your 401k or your IRA for a longer period of time and not be required to withdraw that. He'll be signing that offer later today. Finally, just want to note that today, some changes in the MSCI rules on China. They're going to be increasing the weighting of the China A shares. This is the mainland China shares at the close today. The bottom line here is if you own any kind of international fund over the next several years, you're going to be owning more and more China stocks. That's an inevitability, and perhaps that's a good thing. Right now, Dow's down 38 points. Carl, back to you.